Me take it across to Abneesh Roy and get in a sense of how he's been reading into Unilever's performance. Abneesh, hi, good morning. Your take on Unilever, and I was just going through a couple of brokerages. They continue to maintain either outperform or overweight on Unilever. It seems that all the damage from the volume slowdown and of course the input cost price pressure seems to be very well in the price.
Yes, sir. So firstly, there have been two developments yesterday. One negative on crude palm oil import from Indonesia. It impacts many FMCG companies, including HUL. Negatively, from a short-term perspective, I expect this ban from Indonesia to be reversed in the next 2 weeks because Indonesia doesn't need so much of palm oil and it will have detrimental impact. Plus, anyway, currently there is festival season in Indonesia, so there are holidays. So, I don't think there is a big impact. Plus, HUL, because of global sourcing and so much of scale, will be able to manage the sourcing from Malaysia also. Now, coming to results, if you see versus our and the street estimate, it's a line-by-line beat. So, in terms of revenue growth, 11%, EBITDA growth of 10%, it was a beat versus our and street by at least 3 to 4% easily. On a strong base of 16% volume, they delivered the flattish volume, which is commendable given there is 30% lower unit pack where you cannot take a price hike. You have to cut grammage, and if you cut grammage, your volume growth gets impacted. The third point is, if you see EBITDA margin compression, only 15 bps YOY. So I think that's very commendable given we are seeing 40-year high inflation in India and globally also. So cost control is good and advertising spends are not happening by local players in any meaningful manner. FMCG advertising in terms of volume has been cut by 20% as a sector. HUL continues to outspend in terms of market share, in terms of eyeballs also. In most of the categories, HUL has seen very good growth, gaining market share. If you see a YOY gain in market share, HUL has seen decadal high gain in market share. Now, coming back to your question in terms of the concern, see, rural slowdown is a fact currently. Every FMCG company and possibly every form of consumption, next 2 quarters will continue to see rural slowdown. But yes, FY23, we are seeing good monsoon forecast. We are seeing farm incomes go up because of global high inflation, and government has also been very supportive. So I think in second half of FY23, rural growth should revive. This year, if you see, defensive stocks are back in flavor because global liquidity is also drying up. We are seeing interest rate hikes globally also, in India also it is starting. So defensive should be back in play. And if you see HUL, these kind of valuation, these are compelling valuation for a HUL kind of a stock. We don't see these kind of valuation. So net, these are great times for a leader like HUL to gain market share.
Sure.
They have enough control, cost control. But yes, Q1 margins for the sector will be quite challenging.
Fair enough, Abneesh. There seems to be a little bit of, a little bit of back and forth when it comes to the palm oil export bans. We understand just last night that the chief economic minister in Indonesia spoke of an export ban applied on CPO, RBD, palm oil, etc. How are you looking at this impacting companies like HUL?
So I think the impact will be limited from a sourcing perspective because one, Malaysia continues to remain a source. There is some bit of sourcing from Thailand, Africa also. Second is Indonesia ban, I think is very temporary. Currently anyway, there are festival holidays soon starting in Indonesia. So anyway, not too much of sourcing will happen. My sense is by second week, this ban will get reversed. In South America also, we saw exactly same thing. Soya was banned, but after a few weeks it was reversed because ultimately Indonesia cannot consume so much of palm oil, right? They have to export. If they don't export, they lose out majorly to Malaysia and they lose out on the forex also. So net, these are very tough times for local soap players, local biscuit players because HUL can manage palm oil, but local players cannot because anyway working capital wise, so much of inflation, it will be very tough. They are not advertising, so those local brands will see visibility issue. And third is they will not be able to source palm oil easily versus a Unilever. So I would say yes, it is not easy, but I will be more concerned from a palm oil inflation rather than palm oil supply. This ban is very temporary. I think by next 2 weeks this will get reversed.
Very much, Abneesh, for breaking it down for us. That's the view coming in on HUL. Meantime, Kunj, let's get in your take